though the market managed to stabilize and work its way higher today, you know what? Come on, we're still in a precarious position. I think you need to be on the lookout for stocks that have been able to hold up when the averages get hit, because there's a real possibility we're going to experience more pain going forward. By the way, remember, we're still overbought, just barely. And that's why we're going off the charts with the help of Tim Collins. He's a brilliant technician, my colleague at realmoney.com. Get a better read on a name that's been behaving surprisingly well, a household name, a name called Whirlpool. Yes, in the past 2 weeks, Whirlpool's gotten hit with a pair of negative analyst reports. First, a straight downgrade, then a note of caution. Now, normally when Wall Street starts turning on a stock like that, it gets hammered. But after getting hit with a modest pullback, Whirlpool's held up just fine. In fact, Collins thinks this minor selling actually ended up creating a more bullish technical setup, one that could give the stock some additional upside by the end of the year, maybe to the tune of 10%. Hey, maybe more. What makes him so confident about this iconic big-ticket appliance maker? Let's start with Whirlpool's weekly chart, because it paints a pretty clear picture of what's going on here. Over the past year, Whirlpool has been a whirlwind of volatility. The stock has bounced around between 100 and 150, which is a pretty wide range. Since the start of 2019, though, Collins points out that Whirlpool's made a series of higher lows. We'll get to that. See, but it's going. And then look at this. This is what's really important. Even it's had a hard trouble breaking past 150, all right, like it did today. So the stock is a rising floor of support, all right, a flat ceiling of resistance, creating what is known, just so you know, because if it's new to you, you want to know this. This is called an ascending triangle. And that is a reliable, not the strongest formation of the book, but a pretty reliable pattern. And when the floor of support is rising, it typically leads to an upside breakout. So you would expect this to happen when you see that pattern. After today, that breakup may actually have finally arrived. Meanwhile, the full stochastic oscillator down at the bottom, that's a very important momentum indicator. It just now made a bullish crossover where the black line crosses above the red one. Every time that's happened in the last 12 months for this stock, Whirlpool has rallied. So that's a nice sign right there. Plus, the oscillator's only at 55, and that's a lot of room there before it gets too overbought. You know, I fear overbought stocks. Now, there's another way to look at Whirlpool's weekly chart. Late last year, the stock made a W-shaped bottom. Okay? And then it stopped, followed by a steep decline. Then it bounced, followed by another decline, and then an even bigger bounce. Looking at the recent action here, Collins thinks we're repeating that same W pattern. In fact, right now, we're already in the second bounce, which means Whirlpool could have a lot more room to run. Second bounce here, second bounce here. So how high could this thing go? Okay, check out the daily chart. Over the past couple of months, Whirlpool's been making what's known as a cup and handle formation. An even more reliably bullish pattern than the other one. That's where a stock pulls back and then bounces, forming the cup. We got the cup with the yellow line. And then after that rally, it trades a little bit in a tight channel. Here's the tight channel, forming the handle. For the last 2 weeks, Whirlpool's been making the handle. Sooner or later, Collins expects the stock to break out here to the upside, which is what normally happens after this kind of special select pattern. In fact, there's even a formula for this. Based on the depth of the cup, Whirlpool believes that Collins believes that Whirlpool could trade as high as 170. That's up 20 points from where it's currently trading. That's almost worth buying some options for. The weekly chart's a little less bullish, but when you average them out, you still get to 167.50. That is certainly, again, something that I would actually probably consider buying calls on. One more thing. If you look on the left-hand side of the chart, you're going to see these volume by price bars. Typically don't cover this. They show us where the bulk of trading volume has occurred over the past 4 months. And what we see is that a ton of stock has changed hands between 134 and 148. Collins likes that for two reasons. First, it creates a nice floor of support starting about a point below where Whirlpool's currently trading. All right, that's good news. Second, with the stock at 150, most of these buyers are now in the black. That means we don't need to worry about them selling aggressively into the next rally. They're not trying to escape from a busted position. Now, Collins told us that he wants to see Whirlpool close above 150 or perhaps even 152 before he's willing to really pound the table on this one. Today, we got that close above 150. That means the stock could be making its move. Once the breakout starts, and it may have started already, Collins thinks it'll be smooth sailing to substantially higher levels. Hey, guys, Collins is saying by Whirlpool. You got that. On the other hand, he does point out if it pulls back below 144, you may want to wait for a deeper decline. And if it somehow falls below 135, he says you should abandon ship. But for now, it looks like the upside breakout has started. It's above 150. Could be on its way to 165 or even 170. Bottom line, Whirlpool recently got hit with a downgrade and the stock barely blinked. I like that. Now the charts, as interpreted by Tim Collins, suggest it could have a lot more room to run. And I think you could do a heck of a lot worse than owning this #1 appliance maker that has a greater than 3% yield. Charles in Maryland. Charles.
Yes, good afternoon, Mr. Cramer. Keep up the good work.
Thank you, Charles. Thank you. Thank you.
Very much so. But listen, quick question regarding Home Depot and Lowe's. Home Depot's valuation is rather significant these days, and Lowe's is in the same arena that they are. My question is, since we've had a Home Depot defection, if you will, to Lowe's, would it be an equal play to go from Home Depot to Lowe's in terms of picking up share prices? And then a real quick question regarding Pfizer. I have a position in Pfizer. I want to know, is it worth holding on since it's lost a lot of its value?
Well, look, here's the problem. These are two great companies. And you know that Home Depot is run incredibly well. I think that Marvin Ellison's doing great things at Lowe's, but Lowe's is still in the early phase of its turnaround. I will bless Lowe's as a turnaround and Home Depot as one of the consistent companies that are made up of watch. Watch is Walmart, Amazon, Target, Costco, Home Depot. And they're the unassailable ones that are going to continue to march higher, I believe, right into the end of the year. John in California. John.
Hello, Jim. Good to talk to you.
Hey, John. How you doing in Sacramento? What's happening?
Oh, you're a mind reader. Anyway, we got an issue out here in Sacramento with the foothills and the PG&E and the power being shut off on everybody up in the foothills. Thousands of people are without power for days at a time, restaurants, everything, hospitals, everything. So my question to you, I investigated, did my homework. Me and the cavemen decided Generac is a very good deal. They have a generator on your house and blah, blah, blah. It's hooked up to power,
all right,
natural gas or propane. So we didn't get Generac. It already kind of popped, so we got Terex. What is your opinion of Terex as being a competitor for the upcoming generation of electricity, which we need in California independently from PG&E?
Well, I would say okay, but too much of the business is not from here. And the business also has other aspects that people say you must sell in a slowdown, John. So I am going to have to say, don't buy. I like the thesis, but the reality may not pan out the way it's supposed to. The chart suggests you got to give Whirlpool a shot here. It's doing surprisingly well. Those who are option inclined, maybe you take a shot at it. Much more money ahead. Food waste costs the world $2.5 trillion a year. I'm talking to one company that is really trying to solve the problem. Then, it may be the one that got away, but I'm explaining why Benioff and Iger let Twitter go. And all your calls rapid fire in tonight's edition of the Lightning Round. So stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.